Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan from themorganreport.com. Thank you so much for joining us today, David.
It's always a pleasure, Elijah. Thank you.
Well, it's great to have you here live as we're watching the markets. Silver this last Friday, or I think it was Thursday or Friday, really traded above the $30 level, which is a critical level that we've been eyeing for many years now. And we've been waiting for silver to breach that number, break above that number. Your take on what we saw?
Well, uh, going back somewhat, silver gapped up. I forget the exact number, $26.30, somewhere in there. And it put out an update alert for my membership and said these gaps almost always get filled. And then it moved up, toward the 30 level. I forget if I did another video where it came down intraday. It filled that gap, which almost always happens in commodities markets, whether it's silver or soybean oil. And it filled the gap and then came right back up. And that's an indication of a very strong market. So I'm pretty sure I made another video remarking on that this is a very strong clue that this market's much stronger than we might think, because we've seen it just get clobbered around the $30 level anytime it tried to approach that level. So then we went well beyond 30, as you know. And today, I guess we closed like 30.50 or something. So it's gone from, I think, 32 and change down. So it's not as strong as it was. It looks like it may be temporarily peaking. I'll say that. Will it hold above 30? I believe it will, or close to it. It trades at 29.82 and closes there. I'm not going to have a panic attack, but 30 is a big psychological number. And it happens in all commodities. These round numbers, once a market goes over a certain number, then it usually becomes support. I made another video relative to refresh people's memories that when we got the financial crisis, silver hit around the $9 level. Once it made the quick turnaround, it went from 9 to almost 50. So it went up almost 600%, over fivefold. And I'm not saying that's the case here, although longer term, I believe it is. In fact, I think it'll do better than that. But the point I made was that once it made that peak at 50, it backed off, but it stayed above 30 for about a year and a half. So we had a year and a half's worth of trading where silver traded at 30 or higher. And I wanted to just refresh everybody's memory that this 30 now, with just a few days of trading, and the previous time being 11 years ago, that 11 years ago built a base, a high level consolidation, I call it. That's what any commodities trader would call it. Around a 30 level, I was getting pretty confident after about 2 years that that was sort of the new norm, that silver wasn't going to trade much below. And I was wrong. I saw it set up. I put out an alert. I'm glad I did. And I told everyone, look, if it does this, gets below 20, I forget the exact number I gave them, 29.50, hedge, go short, sell, do whatever you need to, because it's not going to hold the $30 level. And that's what happened. And from that time until this interview, pretty much, it's been below that level. Unfortunately, I mean, it's 11 years is a long time to wait, but here we are. So back to you.
Here we are, and I was looking at the chart yesterday and looking back at the 2011 run from 30 to almost 50. It's crazy because that run was about 2 or 3 months from when it broke the $50, $30 level to when it was near 50. So your perspective on where we go from here, if we do hold this $30 or 30-ish level, then how fast do you think it could go to new all-time highs?
I like the way you asked the question. If it holds above 30, it will be rather quick. If it does get the summer doldrums and we get down and have a trading range, let's say between 32 at the high and 28 at the low, then it's going to take more work. So, the market knows more than anyone, one of my favorite expressions. I have a hunch based on that filling the gap and how strong it was, the Chinese retail market buying, the Chinese spread where there's an arbitrage opportunity that's being done synthetically. Also, I wish I could see the commitment of traders report before this interview, but I can't. It hasn't been published yet, even though its due date is today, because that will give me a lot better feel for my answer. But nonetheless, um, my feeling is that this market is stronger than most people believe. I think that we could see, some people believe we'll see 50 this year. I'm not one of them. I'm fairly conservative. But what you said is accurate. Once it gets above 33, 34, there's nothing holding it back. And the problem that the shorts have is that there isn't that much physical silver. Most of it's accounted for either for strong hands that are owning it for investment purposes and expect higher prices, or the solar industry that's stockpiling it. I mean, the amount of silver going to India is very monumental, but yet what are they doing? And put this in the Morgan report a couple of months ago. The biggest solar farm in the world is going to be built in India. And now that you're sitting down, I can tell you what it is, Elijah. It's 5 times larger than the city of Paris. So think about that. A solar farm that's 5 Parises combined. That's how big that's going to be. So this gives people a flavor for, how potent the solar industry is in regards to how much silver is being.
Definitely. And we have a viewer here. And for any of our viewers watching, just remember you can put a question in the live chat here, and we'd love to ask David it on the air here. We have a question here about the price of silver and when would be in your view, a peak of the price of silver, and for people to stop stacking physical silver. And they put the caveat, please no cutesy cop-out answer like any price, it's insurance stack for your kids, which I agree with, by the way. But I think, yeah, the point is for people who are looking to, I guess, make a profit or get out at the right time, what are some signals or price points that you might be looking at?
It's really tough. I mean, you want to do the best by everyone. And, where was he when I said, not every interview, certainly not, but about every fourth or fifth interview, I said, as long as you can buy silver under 25, do it, and now we're at 30. And, so buy it under 25. There is a limit. I think the best way to approach a commodity, not necessarily just silver, but cotton, cocoa, you name it, is find out what is the average cost of production and then maybe give yourself a boundary within that. So right now, the all-in sustaining cost for the primary silver miners is about $28 an ounce. Now you'll read numbers that are different than that on their website, but a lot of them are doing a little bit of accounting gimmickry and not putting in all the taxes that may be back taxes that are owed. So 28, we're at 30. So take the 28, give it a 25%. I mean, it's up to you. So you got 28. You can add 10% is about $3. So that'd be 31. If you want to be a little more of a risk taker, add on 20%. So 20% of 28 is 284, 560. So you could go $5 above 28, 32, 33. I'd say right now I would go up to maybe 32 and get all you want or what you need. The problem with most silver investors I've found over the years is not they don't believe, but they always expect the day they buy it goes up the next day. That hardly ever happens. And the second thing is they buy too much. They've got 10,000 they can put in the market and they buy it all on one day. The best thing to do is dollar cost average. That's what Miles Franklin talks about. That's what I talk about. That's what a professional does, and stack up until it hits 33. And if it doesn't go above 33, then be happy with what you have. If you have a set goal, I'm going to have 5% of my net worth in the precious metals, and you have the availability to do that now, then you can do it now. So it depends on you. It's your responsibility. But to put, more into the market or do it on leverage or borrow on your credit cards or take a second mortgage on your house or some of the things that people do, I am too conservative to recommend doing any of that. And you don't need, to bet the farm on it. I mean, really, the metals are a hedge against uncertainty, and the uncertainty is growing by the day. Uh, but you also don't want to be at a position where I have nothing but, you know, big position in precious metals, and now I don't know how to get out of it. It's worked against me, and now I've got a unexpected expense, and I've got to sell it at a loss and that type of thing. So use your head, use common sense, balance it, average in, and be happy with it. And I think there'll be a lot of happy precious metals investors this year, next year, and the year after. I mean, it's very bright going forward. Doesn't mean the market won't move up and down. Doesn't mean there won't be some days or weeks that really scare you. But on balance, we're in a bull market.
When it comes to investing in precious metals, obviously there are a lot of different ways to do it. We here at Miles Franklin sell the physical metal, delivered or stored for people, but there is also ETFs that people can use. For example, the Sprott Physical Silver Trust (PSLV), or also probably the most popular is SLV. This question is about if people are looking just to kind of profit from any price rise, do you see any important difference between SLV and PSLV for those really not looking to take physical delivery of silver?
I don't. I mean, basically, my full answer to that question is if you have your, physical position, I don't have any problem with you using an ETF. If that's all you do, well, that's yours. There's really no um, advantage on the PSLV or SLV. There could be an arb between them occasionally, but that's for really sophisticated investors. You have to do the math. But no, I would say either one really. I wouldn't. The SLV is a little bit more liquid, but they're both very liquid, so I wouldn't worry about it. I had a friend that was a hedge funds manager, and he went out to dinner with him. It was a group of us, and he kind of apologized to me. Not that he needed to, but he just basically let it know, and that all he does is a mouse click. I mean, all his silver purchases were the SLV. And what am I going to do? He manages money. I mean, it's the only way for him to get exposure. There's very little slippage. You can do with a click of a mouse. You can move, a lot of silver on paper. And that's his job. I mean, I wasn't mad. I mean, but it would, my preference would be the physical market, but it's just not um, the right market for someone in his position that was managing money. So,
Now, I did want to ask you about gold as well, because obviously we're seeing gold near all-time highs. We've seen a bit of a pullback here to the 2330 level or so. But your perspective then going forward here, it seems like silver has, in some sense, confirmed the rise in gold that, yes, we are kind of starting this new leg of a bull market and we're getting into all-time highs for gold. Your perspective on the gold market in general right now?
well, what we've talked about in the past, I said this time gold would have to lead, and it has. We are hitting nominal new highs, and I wanted to see silver catch up and confirm it. Really, the ratio isn't quite where I want it to be total confirmation, but the 30 level is such a psychological move that I'd say it's confirmed it. So I think we're definitely, as I said earlier, we are in a new bull market, and I'll repeat, the bull market's job is to shake off as many people as possible. I mean, if you think of a bull rider in a rodeo, it's a pretty good analogy because these markets can really buck up and down. Gold usually has more stability. It's still or less volatility than silver has, but nonetheless, both these metals are far from their top. Their top. Where they're going to be, I don't know yet. But what I do know is we've got a long ways to go in both metals.
And what gold to silver ratio would give you that extra confirmation?
70 is my number, and we're not there yet, but I think we're going to get there. And then as far as how high we're going to go, again, no one knows. But I will be looking at the ratio for an exit or a swap. The best in the bull market so far is 33 to 1. It hit it for like a day, but it took 33 ounces to buy an ounce of gold. So this next time, I would say we do better than that. So will it be 30? Will it be 25? Will it be 16? Will it be 10? Will it be 5? I don't know. I actually still think it could get to the classic or the monetary ratio, which is 15 or 16 to 1. But that's an educated guess. I can't prove it. I just have a gut feeling because silver at the end of these bull markets tends not only to outperform gold, but kind of get into a panic frenzy buying because it's affordable and gold isn't. Gold's at, pick a number, 8,000. Are you kidding? All I've got is 8,000 to invest. I don't want to buy one gold coin. I'd rather buy, silver at 80 bucks an ounce or whatever it is.
Now we have a question here about a bill, actually, proposed bill HR 8279. This question is from Willie. He's wondering if you've heard about it, and requests that the bill essentially requests that capital gains taxes are removed from constitutional money. And Willie also is wanting you to post about this and promote this on your YouTube channel. Your thoughts on that?
Yeah, I could. There's a Congressman, Alex Mooney from West Virginia, and he has got this bill proposed. To quote him, it's if they're indeed U.S. money, he's referring to constitutional or the Silver Eagles, it seems there should be no taxes on them at all. So why are we taxing these coins as collectibles? And acting unilaterally, the IRS bureaucrats have placed gold and silver in the same collectible categories as artwork, beanie babies, and baseball cards. And even the Silver Institute has tried to not get it abolished, as this uh, person, this Alex Mooney from the representative from West Virginia, but they have tried to get the capital gains tax down to the standard, not a collectible, which is a much higher rate. And they've been doing that for years, but it's never happened. So I could, in fact, I'm going to interview Stephen Gleason, who has been instrumental in behind the scenes, more or less, on getting a lot of this type of information out and pushing the ball forward to try to get sales taxes removed um, on gold and silver purchases in different states. He was instrumental in getting the bill in Utah and several other states where you can trade gold and silver for anything in that state as long as both parties agree. So I will. In fact, I'm a little remiss in not doing. I've been thinking about it for the last several months. I just haven't gotten around to it, but I will, and I'll definitely post that on my website or post it on my YouTube and my blog both.
Yeah, no, it'd be fantastic to see something like that pass because if you think about it, it's the government is taxing money and I mean
Yeah,
they don't
right.
consider it money, but it's like, what in the world? How did we get to this point, right?
Can I stop you there for just a moment?
Yeah.
I mean, this argument kind of bothers me. It's one of my pet peeves, but there's an argument, you'll hear some guys, pretty smart guys, say, well, silver isn't money. And they're just plain wrong. There's two ways to look at silver as money: legally and economically. Legally, a silver eagle says $1 on it. And I could go into any store anywhere in the country and put 10 of those down, and they not only must take them as legal tender, they are money. The problem is, why would I put down something that's stamped $1 when in fiat terms it's worth 30 Federal Reserve notes? Because it's only going to be accepted at face value, but it is money. Economically, it makes no sense to do, because why would I pay 30 times more than I should for whatever I'm purchasing? But that's where you have this problem. Now, in the bill in Utah and other states, I negotiate basically a weight with, not a stamped amount. So I say, will you take, 7 ounces for your, these 3 books or whatever it is? And we agree, and I pay you, and away we go. But I'm a little off topic, but it's one of my pet peeves because it is money, it's constitutionally money, and it can be used anywhere in the U.S. as money. It's just ridiculous to do so, because why would you pay 30 times what you need to?
Now we have another question here from a viewer about strategic demand for silver. Now the questioner asks, with globalism collapsing, countries retrenching, building up their own manufacturing bases, won't they all increase their strategic reserves, thus increasing demand? And I assume, obviously, this is about silver itself. I mean, we've seen a lot of demand from countries, especially in the East, for gold. But it doesn't seem like there's been a lot of countries buying silver, but silver is so useful in industry and everybody needs it, right? So do you see any demand from countries saying, well, I guess globalism is kind of dying. We need to kind of protect ourselves and we need silver for ourselves. Do you see any demand for that coming?
Well, there's a huge military demand for silver, but it never gets published. You won't see it in the CPM group, or you won't see it from the Silver Institute. First of all, let's define strategic. It means relating to the most important general aspects of something, such as a military operation, political policy, especially when these are decided in advance. So there used to be, and I might get some blowback on this. I actually found it and I didn't take a screenshot of it. And now I can't find it again. But when the Silver Eagle program started, it came from the strategic silver stockpile of the US government. So they considered it to be a strategic resource at that time. They no longer use that word and they don't even consider it a critical metal in Canada. But it was at one time considered strategic. So rather, I don't want to play a word game too much. I just want to agree with this gentleman that yes, it is strategic in my opinion. I'm not sure that that word will be used by governments, but it is relating to the most important, and that's military operations. And so, whether they use the word or not in this war environment, or it's war and rumors of war, you bet it's more important. So, militarily, things are building, unfortunately, but that's our real reality. So, not only is the U.S. building up, so are the Ukraine, Russia, the Europeans. I mean, what's going on in the Middle East with Israel. So, yeah, there will be more demand militarily for silver. There's no doubt in my mind. Anyone can argue that if they wish. Whether we have to use the word strategic or not, I really don't care. I actually prefer to use it because I like the definition, and it is the most important factor for the use of silver is defense, which is really war. And I'm not a warmonger by a long shot. I'm pretty much on the other side, but I'm not a total pacifist either. Point being is that the war drums are pounding away.
Now, before I let you go, David, I did want to kind of recap for our viewers kind of what we're seeing, obviously, in the metals markets and get your final take on this. So, for our viewers just joining us now or joined us in the middle of the stream, silver has broken above the $30, the critical $30 level, and we're really waiting. Well, what happens next? And it seems like what is necessary right now is for silver to hold this $30 level if we're going to move significantly higher from here. Do you have any last thoughts about what is happening in silver and gold and kind of what to expect in the coming weeks and months?
Yeah, well, in the weeks and months, we could expect higher prices. We might hit the silver summer doldrums for both metals, and they go flat to lower for 3 months, 4 months. That could happen. What's very interesting, Elijah, is that there isn't a lot of retail demand, but there is a lot of retail demand in China. And so the Chinese have kind of caught the silver bug recently. And I don't know how long that's going to last. And I don't know if it's going to continue. Uh, but what we do know is that industry alone is starting to put a squeeze on the silver market. And that's not going away. A lot of these green energy, solar farms, and everything else are on the books and they're going to continue. So I would say expect higher prices in the long term. Short term is much harder to call. 30 is critical. If it gets well below 30, look at it as a gift if you're a silver bull and watch retail. Watch what North America is doing. I mean, North America bought silver through these last 11 years when the price was under 30. And now that it's at 30, they've either selling back or they're just holding what they have. But there isn't much fresh buying on the North American continent. But again, in the East, there is. And the arb between the Shanghai Futures Exchange and the COMEX is rather significant. And normally markets that get that out of that big a differential will come back together and they'll maintain pretty much parity or close to it. So that's something to watch as well. I give you a better answer if I was able to see the commitment of traders. If I saw that the professionals had significantly lowered their short position, I would say 30 is going to, I'm very convinced 30 is going to hold. I don't have that information. If they have added significantly to their short position, again, I don't know, but if they had done that, then I could pretty much guarantee that the price would probably get pushed under 30 for a while, but I just don't have the input.
It will be interesting to see. I mean, we've been above 30 for a week now as we're recording live here on Thursday. And I mean, I guess it will be interesting to see if it holds through this week, closes Friday above 30. That should be very interesting. If our viewers are interested in continuing to track this with you, they can go to themorganreport.com. Can you share with us what they'll find there?
Well, first of all, get on the free list and it's at the bottom, scroll down. I'm giving out free consultation for people that want the premium service, and you'll have a one-on-one with me personally, and get you started right on the equity side and the stacking side as well. I've got some insights as far as good ways to do it, and I have a PDF about how to use the Morgan Report, how much gold versus silver you should own. A lot of really good, useful information. You can have the consultation, read the reports. You have 60 days and decide, you know what, really this isn't for me. You would still keep the consultation, $500 value, and we still part friends. I'm not going to have a big problem with that at all. I'm here to help, and it's a good time to get involved if you're not, or if you want to get a little, let's say, information you probably would get many other places regarding the precious metals or natural resource stocks. Have a shot, take a shot.
Fantastic. David, thank you so much for your time today. Any last thoughts before we let you go?
No, thanks for having me. And I really, I'm laughing because I really want to see that COT report. So I had a little more information, but I don't control the market. So I'll leave it at that.
Well, fantastic. It looks like it's not available right now, but if it becomes available, maybe you can send it over and we'll put it in the description here for anybody maybe listening to
Oh,
this on Friday. So
sure.
we
I
can
can do that.
definitely do that for our viewers. So you might
Okay.
find it linked below here if you're listening to this on Friday. But yeah, everyone who joined and also commented in the live chat, asked the questions, thank you so much for joining us today. You all have a good rest of the week and weekend, and thank you so much, and God bless.